it's very straightforward. It's very easy because we're gonna this time. I told you that we have to combine almost everything that we know, and then this time we're gonna combine head and shoulder with what? With change of structure, right? Yeah, we're gonna try to combine head and shoulder with change of structure, right? Yeah. Okay. Cool. Let's move. What is a head and shoulder? Head and shoulder is something like this. Something like this one. Let's say for an example, price we're moving. Okay, let's just say it's like this. Head and shoulder is something like this. Most of the time, the baby peeps. Most of the time, will draw it like this. This is head and shoulder. This here is the head and two shoulders. Can you see that? It's a reversal pattern. Hence, I told you that we're gonna do reversal patterns, right? And then to add on the change of structure will be this one. Let's say for an example, price where we're coming from. Okay, let me just do okay, this one going up and then coming from up there. So yeah, this is your trend line. This is where you're supposed to have what? You have your change of structure. See, change of structure will be this breakout here, right? So what we understand, the easiest part is that after every breakout, this is our breakout, price will do what? Price will go back to test and then continue going down. So if you can see, we are doing one thing, but with a lot of strategies, you see? So we are adding more confluences into our chart. We're adding more and more confluences. So cool. This is gonna be our shoulder this side, and then this is gonna be our shoulder this side, and then this is gonna be our head this side. So if you pull Fibonacci from here to this level here, it's gonna give you 61.8 around here. That's where you should sell it going down. We are selling it because of what? Because of change of structure, because of head and shoulders, and what? And 61.8. Even if the order block, we have the order block this side, last bearish before bullish, you can just highlight last bullish before bearish, sorry. Highlight last bullish before bearish, and then you get your nice head and shoulders. With 3 or 4 confluences, that's how you can risk your money. The safest stop loss, if you are selling here, the safest stop loss should be about your previous high, which is all the way up there. You rather do with a small lot size. If you think from here, your sell here going there is too much, decrease your lot size. Your first exit will be this one. The second exit will be this one here going down. The reason I'm saying the second exit will be this one here. Okay, yeah, it can be somewhere here. Yeah, looking at this where price bounced here, right? Why I'm saying the second exit, because first leg of the head and shoulder, which is this one. This is the first leg. We call this one the first leg. Second leg, which is this one, should be equal to first leg. Second leg should be equal to first leg. Let's go straight to the charts. And then this is a straight head and shoulder. We got another one. We got another head and shoulder, which we call inverse head and shoulders, which is something like this. For example, okay, something like that. Let me just draw it nicely. Let's say price pushed down, push up, all the way down, push up. I like it when it breaks. I like it when it breaks this high here. It's perfect one. It's the perfect head and shoulder. See, and then it pushes all the way down to that level there. So this one is a head and shoulder, but this time we are not normally saying we're saying it's an inverse head and shoulder. It's vice versa of that one. See, this time this side is a shoulder. This is the head. This is your shoulder. Again, Fibonacci from here to that level, and then 61.8 is somewhere there. Order block, you highlight last bearish before bullish, before this bullish movement, which is this level, if you don't like using head and shoulder. So I'm saying we're combining change of structure with head and shoulders. Where is our change of structure? Let's say for an example, we're having something like this, something like that, going up and down like that. Okay, let's say we draw something like a line here. A change of structure will be this breakout here, right? So I told you guys that you must be able to combine everything that you know on every strategy that we know on one chart. so that you can have many confluences, so that you can be able to identify this. So it's gonna be easy for you to risk your money if you got so many confluences. Why are you selling? Why are you buying this kind of pair, right?
Okay.
Yeah, it's gonna give you confidence that okay, let me just buy it now because I'm having this and that and this and that and this and that, right? And then yeah, having this and that and this and that. Let's go straight to the chart, guys. Let's start with inverted and shoulders. It looks easy, and then I'll also show you how to identify head and shoulders even before before it breaks the trend line, before it changes structure. You can identify, you can be able to identify head and shoulders before it can even break it, before it can even change the structure, right? If you can understand that. Okay, cool. So yeah, let's start with what? Let's start with inverse head and shoulders. Inverse head and shoulders is something like this one here. Let's just cancel everything there. Boom, boom. Okay, it's inverse head and shoulder. Okay, let's do this. Where can we get you? There. Let's cancel everything there. Sorry about this, guys. Sorry about that. Bingo. Okay, cool. What do we see here? We see a nice change of structure. We see a very nice change of structure. First thing when you're looking at your chart like this, first thing when you approach your chart, like for an example, I just got. Holy cow. Sorry, guys. Ish. What's going on? Okay. Okay, let me just make this quick call. Okay, before we okay, this is our head and shoulders, inverse head and shoulders. It was very clear. It was very clear. A lot of traders just saw them. A lot of traders just identify this head and shoulders. Let me do this quickly. No, move easy. Move easy. Ik fecha. Ik fecha, wena mooi. Ja, ita move easy. Yeah? Okay, cool. Okay, guys, sorry about that. Okay, I want us to show you why a lot of traders spotted this head and shoulders and then took a nice buy there for dollar index. Okay, so first of all, we had what? We had a change of structure, which is this level here. Which is this level here. This is a pure breakout. Can you see Ali? Can you see a pure breakout? It breaks out.
Yeah.
It breaks out going up. Remember, if it breaks out going up, it should come back to test before it continue going up, right? Okay.
Yeah.
So Fibonacci, guys, is very important. Fibonacci is very important, guys. Okay. Cool. If we do, let's say for an example, if I miss something, it'll tell me if I miss something. Let's say for an example, this side here. This side here, we're anticipating that is going to be a shoulder. And then here, another shoulder. You see that, right? And then
Yeah.
This is the big head there. This is the head of that head and shoulders. This is inverse head and shoulders. So it's adding more into the confluences. So how will you get this entry here? You pull your figure from the low to the high, which is this one to that one there. And then where's your 61.8? 61.8 is that level there, right? The fib zone is that level there. That's when you should just press. When price touch that level, you just press buy to that level. Remember, you should always find the nearest exit. The nearest exit. Let's check where could be the nearest exit. It can be somewhere there. So we can just simply say this. The first leg is this one. So it should be equal to. Second leg should be equal to the first leg. It means here will be our exit here. It's gonna be our exit. Second exit, and then where is gonna be our second exit, and then here is gonna be our first exit. So for your stop loss, guys, don't ever make that mistake. Your entry is here. Remember, your stop loss should be below the lows, which is this level, or below 100, which is this level. The safer your stop loss is, the better. Don't go and look for $50 stop loss, 50 pips stop loss, $20 stop loss, 10 pips stop loss. No, don't do that. Don't do that. Always make sure that you hide your stop loss. Hide your stop loss. Rather go with smaller lot size than do that. Rather go with one entry besides two. What I usually do, I always go with two entries. First entry, I'll place, like, let's say buy limit, I'll place it on 50. Second one, I'll place it on 60. In case it doesn't reach that level, is 10 on 50, it touched my entry going up. So that one is another day story. But do you have any questions on this one?
No.
No.
No questions?
No.
You understand it, right? It's just a simple thing. It's just a simple thing, guys. We're just adding everything that we know, right, on that one, just to add more into more confluences. You should be able to use at least 3 to 4 strategies on one pair. How many confluences we should be able to use confluences? Remember, I told you about continuation patterns, which is, if I didn't, then I'll do it soon actually. Continuation pattern, we've got 2 continuation patterns, because today we're doing reversal pattern. Number 1 is bullish flag. This thing looks like a flag, right?
Yeah.
It looks like a flag. So it's a continuation pattern. If it's like this, it looks like a flag. It's a continuation pattern. It should continue going up. The pole of the flag will be approximately equal to that breakout there. So if this one is a flag, we've got flag and we've got pennant. So pennant is something like this one. It's gonna be something like this one. It's either gonna do something like a small triangle there. See, it's not going to be straight give you a flag, but it's still going to continue going up. It's a continuation. And then on this pennant, we got the neckline. What is the neckline? Where is the neckline? This level here is called your neckline, which is this one. It's called your neckline. This is your neckline. So on head and shoulders, we also got what? The neckline, right? The neckline, which is this level here. Which is this level here. So because you missed the entry there using Fibonacci, you missed the entry here. Because you missed a buy entry there, it's not the end of your story. You still got the neckline where you can wait with what? With buy stop. Right? It's only gonna trigger you once it breaks this trend line going up. Are you guys with me? It's a continuation pattern. Remember, first leg of a head and shoulder should be equal to the second leg. The second leg of a head and shoulder should be equal to first leg. So how will this benefit us? How will this help us? For us to be able to do what? To get out on that trade. The reason we lose money, some of the reasons we lose money is because we don't know where to get out. We don't know where to take our money and run. So always take your money and run. Are you guys with me?
Yeah.
So yeah, this is a pew head and shoulders. Let me just show you a nice a straight one. This is inverse head and shoulders. So let me just show you. And again, one thing that I forgot to add into that confluences is because Okay, we got change of structure. This breakout here. See, the lows were getting lower. It went up, went down, and then it breaks. Eventually breaks there. Now it's coming to do what? It's doing the uptrend. So it's giving us the head and shoulders there, right? It's giving us that nice head and shoulders there. This is what exactly happened on that pair. So you should always play around with it, guys. Play around with it. Let's jump quickly to which pair. Let's see something that happened this week, maybe. Let's jump quickly to Euro Pound. Yeah, it's Euro Pound. Number one, we are combining head and shoulders with change of structures. See, so we're having. Let's just draw just roughly draw that in there, and then we're having what? Pure breakout. Remember, this is a pure breakout, right? And then went back to test, and then do what? And then sell it there, going down, right? Right, guys. So in this manner, it doesn't have to look beautiful, guys. It's gonna be your shoulder, your head, and then you're anticipating a shoulder this side. So how will you get the entry for on that shoulder? You pull your fibro from the high to the low, which is here. 61.8 will be your nice entry. You put your entry here on 61.8 and another one here on 50, and then it went down with you. First exit. Stop loss, always put it above the high. I know a lot of people will say I'm crazy, but put it there because we should always hide your stop loss. First exit is this one. If you can check, it's 1:1 trade. I'm willing to lose $100 to gain $100, but we still have this level where we can go. This level down here, where you can go. You can just go and put your TP there, right? Your TP down here. Yeah, I'm willing to lose $80 to gain $180. It's still fine. I'm losing or $120. Still fine. 1:1 trade. You rather go with smaller lot size. Don't say I'm crazy. Don't say everything, because this thing can sometimes retrace to 70 point something percent, 78 point something percent. So that's what we do. Let's go to another one, which I think is. It doesn't have to. It's more nicely if it does this. The head and shoulder is more nicely if it does this. More nicely if we're having something like this, and then we're having a head there. It's more nicely if we're having a breakout here and then a continuation pattern here. It's bearish flag. I like it this way. Or I need to continue going on because it's adding more into conferences. It's adding more into conferences, right? Bearish flag there, and then continue. This is gonna be a shoulder, and a head, right? It's gonna be an easy one. Yeah. So the trick one, the one that is triggering me now, the one that makes me think, okay, the one I don't get well now is it's on Euro USD. I can't touch it well. Okay, before we go to Euro USD, let me show you on this one. Before we go to Euro USD, let's go to UsOil. Can you see? Do you see how easy this one? So here I just removed what? I just removed the trend line there. Okay, yeah, I just removed this trend line. So this trend line give me what? Shows me that this one is gonna be a reversal. I just removed it for my own reasons though. Okay, and then here we got what? We got bearish flag. Remember, continuation pattern. See, and then it formed a bearish flag. It formed a bearish. Oh my god. Oh, market is closed. Okay, it's gonna form bearish flag, which is gonna continue. It did continue going down. See, it did continue going down, and 10 where price 10 before, which is this level here. Remember, we're getting out on the nearest, like above the previous high. So the reason we sold today is because of the change of structure and the head and shoulders there. So now, what I'm thinking, the reason we locked the profit there is because of this. The reason we locked the profit there is because of this. It created a big head and shoulders. Can you see this one? Guys, you look scared. Don't play around with me, guys. Come on, give me the ghost question. This is a shoulder this side. I'm anticipating a shoulder this side. But now, the reason we locked the profit there, we don't usually lock the profit so early. The reason we lock the profit is because of this small trend line. It might be creating another small inverse head and shoulder inside that one. You see it, right?
Yeah.
Yeah.
Can you see how tricky this is? Can you see how tricky this is? So it might be we got the bigger one. We got the bigger head and shoulder. We got the bigger head and shoulders, which is, let's say, start here and then it went down and then it goes up and then it went all the way down and then it formed what? Another shoulder this side. So it might either do this or do what? Or do this. So this is tricky. You should play around with it, guys. It's very, very tricky, this thing. So we also have this one here. Price push down, push up, push down again, and then now it's pushing up. So it might be, because of this change of structure here, it might be forming another inverse head and shoulder to push price all the way up. See, scenario is 2 now. You see it, right? We do have for now, the reason we locked that profit there is because of this might happen. So if this happen, what are we gonna do? We should always know what to do. We should always have something to do. We are full-time traders. We should always be on the market. What do we do if it happens something like that? We got a neckline. If price push up from here, if it push up from here to reach this level, this is going to be our neckline here. So on top of that neckline, we'll wait with what? Buy stop, right? If it breaks this, now the highs are getting higher. It's going to turn there and then come back to this level, either continue going up. So we should play around with it, guys. We should play around. It's very, very tricky, this one now. See, because most of the time, like I said, I like the head and shoulder that comes like this. I like the head and shoulder that goes like this. As long as we are having this breakout here of this low, and then it's going back to test. And then if it's going back to test, it has to go with a consolidation. This is a perfect one. If it goes with the consolidation, it's the perfect one for me to sell it going down. So this one here, this impulse going down, it gives me the doubt. So I'm thinking, okay, let me just lock this profit there and then wait to see if price can break this high here. If it breaks this high, we're gonna have to wait there with a buy stop to push it going up to that level there. Right? Any questions?
Yeah. No.
So, so in this case, we based on trend line or based on head and shoulder. If based on trend line, it already structure already changed, right, from down to up. But if based on head and shoulder, it haven't confirmed.
The head and shoulder. Look.
Yeah.
Okay, cool. Let me show you something. Let me try to add something there. If we can zoom in. Even if this candle is red, but it shows us that it rejected lower prices. Can you see that?
Yeah.
Best wanted to push price all the way down, but bulls rejected those prices. Can you see? Bulls rejected those price. That price to go up, to go down. So best were pushing hard to push price down to that level, and then bulls take over to come and close here. So it tells us that the best might be exhausted. When market open, it might push price all the way up. Are you with me? Look at this one. Bulls push price up, got exhausted, best take over, push price down to this level, and then it continue going down to that level. right? Also look at this candle here. It shows us that bears are really trying to push price down, but they keep getting rejected. This is another reason why we locked our profit there. This is another reason why we locked our profit, because we want price from here. It might do what? It might push to that level because of that small head and shoulder that I just showed you there. Okay.
Okay.
Because of this head and shoulder, this inverse head and shoulder that I just showed you. You see it, right? Because of this head and shoulder. So we're gonna have this. If this one was a clear signal, it was supposed to be a bullish pin bar. So now it's not a bullish pin bar. It's what? It's a red, but it shows us that bears tried to push price down, but got rejected. So in other words, market makers didn't want to give us the exact signal to buy price going up. So if you pull your Fibo from the low to the high, the peak of the high there, did we reach 61.8? Yes, we did reach 61.8. It might be, we might be right. This might be a inverse head and shoulders. We might be now going all the way up, right? We might be now going all the way up. So this, for me, this is another scenario that we should just look at, right? Because it's failing to do so. Let's quickly jump to guys. We're still gonna do a lot of things on market analyzing. This 1, 2, 3. I'll show you how to identify this 1, 2, 3s and stuff. And then okay, cool. Let's just continue. Okay, let's go to Euro USD quickly. There we go. Euro USD on daily. For delete everything. Okay, cool. Check. This pair was going up, nicely going up there, and then all of a sudden a breakout. Right? After that breakout, expect price to pull back to that level.
Okay.
See, your head and shoulders there is this thing we call it slanted head and shoulder. It might be something like this one here. See, the shoulder might be, this shoulder here might be, can you see, you know what I'm saying? The slanted head and shoulder. It might be this one here. So again, if you pull your Fibo from the nearest low to that level, okay, this is 61.8 where you're supposed to be selling price going down. So if you saw this one, obviously we're gonna do what? We're gonna sell it there inside that level. Yeah. Sure. Oh, sure. Okay, we're gonna be, you're supposed to press sell here, and then this level here was gonna be your first exit. Where's your second exit? Sometimes we use Fibonacci, guys. Sometimes we use Fibonacci to get what? To get the exit. To get the exit. Like for an example, since we guys, just pay attention with me. I told you I'm not that well today. Since we break this one going down, never tested. Okay, so if you pull your Fibo from the low, extreme low to the high, which is there, and then if we can just claim that this one will be our, if we can just claim that this one will be our continuation, consolidation there, yeah, it might work. And then this one will be our, our change of structure. It changed here, it changed here, it changed structure here, it went back to test, it changed here, never came back to test. So this thing might be going to 61.8. Looking at this one should be equal to, so pole of that flag should be approximately equal to that one. So we got another 61.8 level, which is this level here, right? Are you
Yeah.
guys playing along? Let's play along
Yeah.
here. So this is what I basically see on Euro USD. So it might do A B C D. Remember, A B should be equal to C D. This is the pole of the flag should be approximately equal to the breakout. So we're gonna be having A here. Okay, so let me just do this. We're gonna be having we might be having our A here, our B here, C here, and then D. AB is equals to CD. You see, AB is equals to CD. So it's gonna add from here. It might push price all the way up to that level there. We're not sure yet. We just have to wait and see. But this is what I see. So this thing all started where on daily. It all started on daily time frame. Okay, let's just go to daily quickly. Let's see what we see on daily. What do we see? What do you see on daily? We see this strong level where price failed to break. Yep, we see this level where price failed to break, and then we see another one where price to fail to break. Let's just put it here. Looking at this level here. Okay, yeah, all the way there. Yeah, and then all the way that side there. Okay, cool. So I might be thinking, okay, cool. What's the price doing now on daily, and then what is it doing on 4 hour? Okay, looking at 4 hour, we saw that it might be going to 61.8 and then goes up, and then on daily, it might be doing what? If we're having change of structure, do you have change of structure there? Do you have change of structure? Do you have a line there that is broken? Do you have it? If we can just draw it like that, no, it's not that nice. Yeah, but we can consider it. We can consider that one and that one and that one. By even one touch, two touch, three touch, four touch, 61.8. It might work. Cool. So we can take Fibonacci from here to here, from this low to from here to here. I'm not biased with this one, but I'm thinking it's going up. Okay, cool. So it might go all the way down to 61.8, and then we buy it there. See, and then the head and shoulders will be this level. This level here will be, sorry about that one. So this one is gonna be a head and shoulder. This whole level will be a shoulder. This 61.8, we're expecting another shoulder. And then this one is gonna be a hit. So it still has to push close to 82 pips to reach 61.8. 82 pips to reach 61.8. And then if we go to 4 hour, again from here, this is your first exit, your second exit is still on the same 82 pips profit, see, for us to get out of that trade, right? So move on 4 hour. The reason I'm confused is that if this is my first leg of the head and shoulder, if this is my first leg, second leg should be equal to the first leg, which is gonna be go deeper to that level there, right?
Yeah.
But the most important thing, guys, is to be able to know where to take your money and run, right? To be able where to take your money and run. Let's try another one quickly. Which one can it be? So, do you have any questions, guys?
No.
So you understand head and shoulders nicely.
Yeah.
Yeah.
The more we connect, the more we do classes, the easier you guys connect, the easier you guys get this. I like that one. So cool. Okay, let's see what else can we do. We got 5 minutes. Okay. We got 5 minutes. Let's try USD JPY in 4 minutes and 2 minutes. Let's try USD JPY. Where are you? There you go. This is our USD JPY. The most important thing, guys, I'm telling you, it's not an indicator, it's not everything, it's just draw that trend line. Once you break that trend line, price should go back to test that trend line, right? So if you can check this level here, we can take this level as a shoulder, and then take this one here as a shoulder, and then take this one here as a head. So another thing you can just roughly add is that small consolidation there. See, which is a continuation pattern. So where exactly are we going with this one? We can go all the way to this level there. Are you guys with me? So
Yeah.
if you can see, this head and shoulders is a simple thing because we know the change of structure. For after breakout, if it goes up with the consolidation, it's forming another confluences, which is bearish flag or bullish flag. It's going there with the consolidation to test. What is a consolidation? Consolidation is called offload. If already you are in a cell here using 1, 2, 3 strategy, you are in a cell there. Let's say your TP is down there. Market makers knows exactly what to do with you. They will play with your emotions here, doing what? Consolidation. Let's say your target here was $100 or $200 or $500. Somewhere here you are running on what? Let's say your target is $500. Somewhere here you are running on $350, and then you start doing this consolidation. You start going up, going down, going up, going down. What are you going to do? Emotionally, you'll end up doing what? Taking that small profit before, because you don't know what to do next. So again, we have the neckline here. If you're afraid to go in here with a sell, this is the neckline. Place a pending order there. Sell stop below the neckline. TP next to the support. If you're afraid to go in there, but for me, we go in here with we go in here with the sell, first exit, second exit there. See, for us, we go in with so for me, it's gonna be let's say first leg, pull back, highs are getting higher. Now suddenly we had a breakout, retest. We're expecting price to pull back to that level, forming in very nice head and shoulders there. A very nice head and shoulders there. As you can see, it's very easy when it goes on and on, because we are adding more confluences. We are adding more confluences into the chart to make it easy trades to trade, for you to be able to have confidence when you trade. Again, one more thing, we're left with 1 minute. One thing I can tell you guys is that the more you practice, the easier you'll be able to see this. And then tomorrow I'll explain to you I'll explain to you supply and demand. Why do you call a level a supply? Why do you call a level a demand? A demand zone, a supply zone, right? So
Okay.
yeah.
Okay.
If you can see, let's say if you can see this one here, it went up, went down, went up, break that level, went back to test, continue going down to that level. Break this low here, went back to test, continue going to that level. You see, this one here was a head and shoulders, even though it doesn't look nice, but it doesn't have to look nice. It's your money anyway. We have left 4 minutes, guys. Send me the emails, I'll send you the videos, so on and so forth. Or you can check it on YouTube. So I'll post it on YouTube today and tomorrow. I'll also try to place these videos on YouTube. Thank you very much, guys. Tomorrow I'll show you how to do order blocks, and I'll also show you how to do supply and demand. We are good. Thank you very much. Have a nice day, guys.